Senator Lauren Legarda and the UNISDR, I am pleased to welcome and thank you for your attendance this morning. Today's high-level forum on disaster risk insurance in the Philippines is the first in the country, facilitated by UNISDR together with Willis Re and Munich Re. It builds on initial efforts of UNISDR and the government through the Office of Senator Lauren Legarda as early as 2007 to explore appropriate disaster risk transfer mechanisms for the country. The roster of disasters, death tolls, and economic losses grows longer, and the lessons to be learned remain many. The recent unparalleled damage and losses from Typhoon Yolanda or Haiyan, estimated at 571 billion pesos or 12.9 billion US dollars, and the likelihood that worse scenarios could come with the country's increasing exposure and vulnerability to natural hazards compel us to explore with greater sense of urgency more effective interventions to reduce risk and to preserve our development gains. In 2009, the year the climate change law was enacted, the comprehensive post-disaster needs assessment report for Tropical Storm Ondoy and Typhoon Pepeng, or Ketsana and Pharma, respectively, estimated the economic losses at 2.7% of the country's annual GDP. It showed the adverse impacts on the productive sectors and the significant reduction in the production capacity. It then recommended that the country adopt disaster risk reduction and management that is more proactive, coherent, and effective, that disaster risk financing shift from risk retention to risk transfer, hence limiting the public share funding with higher involvement of private sectors, and that local governments should have a key role in implementing the recovery and reconstruction and future measures to mitigate disaster risk. In 2010, the DRRM law, or the Disaster Risk Reduction Management Law, was enacted, which embodies disaster risk transfer as a disaster risk reduction strategy. The law mandates the National Disaster Risk Reduction and Management Council to develop appropriate risk transfer mechanisms that shall guarantee social and economic protection and increase resiliency in the face of disasters. The economic losses in the Philippines, which increased 18-fold since the 70s, are but a part of a global trend of increasing economic losses from disasters that has gone out of control and will continue to increase unless disaster risk management becomes a core part of business investment strategies. The 2013 UNISDR Global Assessment Report estimates the direct cost of disasters in the 21st century is about 2.5 trillion US dollars, about 50% more than the previously estimated. The Philippine archipelago remains vulnerable and exposed. Most islands are very poor, with buildings of mostly light construction materials. They are highly dependent on fragile transport links, which once cut make it difficult to support affected communities. Many populations and economic assets are exposed to typhoons from the east and also vulnerable to earthquakes, as we saw last in Bohol and in Cebu. Strengthening disaster risk management, including promoting risk transfer mechanisms like insurance, is therefore vital for the future resilience of the country. It is in this context that this high-level discussion is being held and expected to inform the current review of the DRRM law and the process of developing the National Disaster Risk Financing Policy and Regulatory Framework, which shall include clarifying principles and strategies for catastrophe risk financing and insurance, and promoting incentives for public and private sector investment in disaster risk reduction. It is also hoped that these policy initiatives in the Philippines will serve as a model in the ASEAN region, which is keen in advancing disaster risk financing and insurance among member countries. The presentations and discussions that follow ought to explore some practical options for disaster risk insurance for the country at national, local, and micro levels, to identify bottlenecks for implementing these options, and to elicit suggestions to move forward. To facilitate the technical discussions, international subject matter experts join us today, and I have the honor and pleasure to introduce them. We are very pleased to be joined by Mr. Rowan Douglas, who is on my right. He is the CEO of Capital Science and Policy Practice of Willis Group and chairman of Willis Research Network. Rowan leads the Capital Science and Policy Practice for Willis Group, which coordinates these three elements to confront large-scale global challenges of risk, resilience, and sustainable growth. Rowan is a member of the UK Prime Minister's Council for Science and Technology and reappointed for a second three-year term until 2016. In addition, he chairs the UNISDR Working Group on Private and Financial Sector, preparing for the second YOGO Framework for Action, working in 2015, which is next year. So please welcome Mr. Rowan Douglas. Welcome. We are also joined by Ernst Roth, who is head of Corporate Climate Center of Munich Re. The CCC serves as central entry and coordinating point for Munich Re on renewable energies. Ernst is a member of the German Geophysical Science, the Wind Engineering Society of Germany, the Australian Earthquake Engineering Society, and the American Association for Wind Engineering. Please welcome Ernst Roth. We have also David Simmons. Welcome. He is the managing director within the Willis Re Analytics team in London. He heads the Strategic Capital and Resource Management team, which has the responsibility for financing and capital modeling, financial and capital modeling, including regulatory and rating agency affairs. He designed, modeled, priced, and helped place the reinsurance and capital market protections for the Caribbean Catastrophe Risk Insurance Facility, and has had involvement in a number of other national catastrophe schemes, including New Zealand, Taiwan, and Mexico. Welcome, David. We are also joined by Mark Morley. Welcome. Who is Managing Director, Southeast Asia of Willis Re. Mark is responsible for Willis Re clients in Southeast Asia and manages the development, coordination, and placement of the reinsurance programs of several of the leading insurance companies in the region. Mark joined Willis on the graduate scheme in 1993. He joined the Asian team in 1994 and moved to Singapore in 1997. He was promoted to Regional Director in 2007 and Managing Director of Southeast Asia in 2012. Welcome, Mark. We also welcome Richard Sanders. Richard, who is Executive Director and Senior Catastrophe Risk Analyst at Willis Re Singapore. Richard was one of the founders of the Catastrophe Management Services group in Willis and is one of their senior catastrophe specialists. He has worked on natural hazards projects in Japan, Algeria, Europe, and more recently in Asia, with a particular specialism in flood risk analysis. Thank you for joining us, Richard. We're also joined by Thomas Moll. Where is Thomas? There he is. Welcome, Thomas. He is the Vice President of Public Sector Affairs at Munich Reinsurance Company. In 1999, Mr. Moll joined Munich Re, where he was appointed as Marine Underwriter for Korea and Japan and was Topic Network Leader of Munich Re, Munich Re's Marine Knowledge Management Network. Since 2006, Mr. Moll joined the Innovative Solutions Team of Asia, and effective April 2008, he was assigned to Munich Re Singapore as Innovative Solutions Manager. In July 2012, Mr. Moll was allocated back to Munich to support the newly formed Department of Public Sector Affairs in the development of tailor-made governmental solutions. Welcome, Thomas. We are also joined by Dr. Jerry Velasquez, our colleague in the UNISDR, who is Chief of the Advocacy and Outreach of the United Nations Office for Disaster Risk Reduction based in Geneva, Switzerland. He was previously the Senior Regional Coordinator of UNISDR for Asia Pacific region and partly the culprit for this event, for coming up with this event. So welcome, Dr. Jerry Velasquez. And on my left, we have Ms. Rachel Herrera, who is the head of the Climate Change Senate Committee Secretariat. The Secretariat of the Climate Change Committee of the Senate. So I believe after this briefings, many of you will be linking up and corresponding with Rachel for the follow-through. In that regard, we move forward and we welcome all the participants here. I believe there are representatives here from the Philippine Insurance Commission, Philippine Insurers and Reinsurers Association, the Government Service Insurance System, or GSIS. May we know who's the representative of GSIS here right now? Sir, could you please join us here? Please. Could you please introduce yourself?
Okay, my name is Leopoldo Casio Jr. I am the acting vice president of the GSIS.
Welcome, sir. Is there a representative from the Department of Budget and Management? Please introduce yourself, ma'am.
I am Evelyn Managelod from the Fiscal Planning Bureau of the Department of Budget and Management.
Okay. Any representative from the Department of Finance? Sir.
Yeah, I'm Undersecretary Jeremiah Paul Jr.
Welcome, sir. From the Office of Civil Defense, do we have any representative? Is Undersecretary De Rosario here? Not yet here. From the Commission on Audit, do we have any representative? Please introduce yourself, ma'am.
Good morning, everyone. I am Julia Elia Moreno, the representative for the Commission on Audit.
Thank you. From the Housing and Land Use Regulatory Board, any representative, please? Could you please join us here? There's still an empty chair here. Kindly introduce yourself, sir.
Good morning. I'm Attorney Angelito Aguila from the Housing and Land Use Regulatory Board.
Thank you for joining us. From the Central Bank of the Philippines, any representative? Welcome, sir. How about from the League of Cities of the Philippines? League of Cities, League of Municipalities. But we are joined here by Mayor Al Arqueliano. Can you please introduce yourself, Mayor Al?
I am Alfredo Arqueliano Jr., a former mayor of Municipality of San Francisco, Camotes, Cebu.
And you and I is there sa Sakawa Awardee for resilience. How about League of Provinces of the Philippines? Any representative? I mentioned earlier the Philippine Insurance Commission. Any representation? How about the Philippine Insurers and Reinsurers Association? Yes, sir.
Yes, I am Dr. John Benedicto. I represent PIRA. Yeah.
Thank you. Thank you for joining us. Now we'll have the presentations on the three possible mechanisms for catastrophe insurance. And I would like to give the floor to Rowan Douglas and Dr. Jerry Velasquez to start the ball rolling.
Just checking for Jerry's presentation on the main screen.
I think we still have other participants whom we haven't acknowledged, and they're seated at the back. Can we get your name, sir? Could you please introduce yourself? Thank you. Philippine Deposit Insurance Corporation. Sir? Okay. From the private sector, no? That's right. Anyone else? Okay, we draw your attention to the presentation.
Good morning, everybody. I think we missed Kathy over here from the World Bank. Kathy, maybe you could introduce yourself.
Good morning, everyone. My name is Kathy Vidor, and I'm from the World Bank office here in Manila.
So I'm going to be making a very short presentation on the model, which just gives a big overview of why we need to look at insurance and what's the argument for doing this. I think most of you are familiar with this picture. This is a picture of the Southeast Asian region, and these are the weather-related hazards. The drought index, the darker red, is the most prone to drought. The green one is tropical cyclone. This is accumulation of the wind speed over a course of 50 years, and then the floods is blue. And basically, you could see already the combination where floods happen, the droughts happen, and where the typhoons come. And Philippines is really prone to cyclones. In fact, you could barely see parts of Luzon. Of course, the thing that has changed recently is that in this picture, over history, you don't get a lot of typhoons in Mindanao. But for the last 3 years, you're getting every year some calamity in Mindanao. So it's actually going to the south. So these are the loss events in the Philippines. This is from UNICRI. I borrowed it from our colleagues here. And as you can see, the loss events, the number of events have been on an upward trend over the years. And you could see the mix of events, the meteorological and the hydrological events still dominate on the type of events that happen in the Philippines. And in terms of insured losses, as you can see, the trend is mainly overall losses, and the insured losses is a very small part of this because the insurance cover is very small. And in a typical, in an ideal situation, a country will actually, have a greater understanding of its risk, and then they will layer the risk depending on what their understanding of the risk is. So, for example, a certain portion of the total risk they will reduce. So they will try to do mitigation measures to reduce a certain part of the risk. Now, a certain part of the remaining risk they will transfer through means such as insurance. And the remaining part they will finance. They will absorb it. This is an ideal situation. Unfortunately, in the Philippines, we have a larger focus on this last part. We put a lot more money into financing the risk. And the first two, reducing and transfer, is not as prominent as this last one. Although our budget for dealing with disasters is increasing. So this is from the World Bank. These are the different instruments that one can use on risk financing, and they're all different. But as you can see, even both ex-post and ex-ante financing are available, and there are different types. And in particular, post-Yolanda is very relevant because a lot of this are already available to us. Of course, depending on the instruments that are already there. And the ideal risk financing strategy is basically a combination of retention and transferring. Because as you know, as we all know, disasters have, depending on the frequency, some disasters happen very frequently. For example, you may have a flood or a cyclone that happens every 1 year or every 5 years. And then you may have an earthquake that comes every 100 or 200 years, but very intense. Now, an ideal combination would be, the very strong ones that happen very infrequently. You have different layers wherein you will have a combination of insurance, reinsurance, contingent credit reserves, and the larger portion you will ask for donor help because you simply cannot deal with, for example, a very large earthquake. So the losses for those kind of things is so big. However, the more frequent ones, you may want, that happens very, very frequently, but very small impact, you may want that you deal with it using your own reserves. So in an ideal situation, if we have a complete understanding of our risk, there is a corresponding strategy using various means of financing to actually deal with these risks. And we hope that this is the first step towards understanding what to do in this. And in the Philippines, we've always said that the Philippines has one of the best legislation in terms of DRRM and climate change. We've always said this, at least in ISDR, we've been quoted several times that it's one of the best legislation. I think now is the opportunity it is now the opportune time to attract capital to correspond to this advanced legislative framework. And I think that's the reason we're here, to try to attract capital to make it aligned to the advanced policy framework. Now, I leave you before I pass it on to our colleagues from Willis. This quote: in an event of a national catastrophe, the national government will usually pay, so why buy insurance? Because in our case, this is what usually happens. So there's always a subsidy in times of disaster, because we've always financed ex post. So therefore, there is no incentive to buy insurance. But in reality, the national government is in fact subsidizing the local governments and other stakeholders. So in reality, it happens because we provide relief, reconstruction, and recovery. So the only kind of question that we would like to tackle now is how can we shift that from really just reacting to more proactive means to spread the risk. And with that, I pass it on to Rowan. Rowan?
Jerry, thank you very much indeed, and obviously Manny, thank you very much for those words of introduction, and thank you to everyone who's come this morning to this very important and actually historic meeting. Not just historic for the Philippines, but actually historic, I think, for the region and beyond. I just want to pause for a moment to just reflect on why we are here today. Next slide, please, Richard. We are here because we've all reached a tipping point. Essentially, we've had enough. It can't go on. And it's affecting us all professionally and personally, locally, regionally, and globally. It's affected myself personally. 3 or 4 days after the event, Yolanda, I was with my family having lunch in a suburb of London, 8,000 miles away. And I suddenly, as I sat there with my 4- and 5-year-old child and my wife, I just imagined, as the pictures came through on our television screens yet again, of what it must be like to lose your children, or for them to lose their parents, or for us all to lose our house. And not just one, but thousands, tens of thousands. And it truly affected us. And we are connected to the Filipino community in London, and for the first time we were contributing, my My children gave toys, and of course you then stare to yourself and say, they must do something. They. And then you have that brutal understanding that they are you, one. That you are one of those people that actually has to do something. And that one is in a position to do something. And I suppose that was the first recollection. And then how are we here now? Well, 3 remarkable extreme events happened in short succession. We talk about extreme events usually being bad, but I suppose in this sense they were good. My colleague Richard Sanders was here in Manila about 2 or 3 weeks later at another event organised by Jerry and Hans Sai, the Top Leaders Forum on Disaster Risk, where he met Senator Lagarde. Coincidentally, at the same time, I was in Geneva with Congressman Mel Sarmiento in Geneva planning the HFA framework. And all of a sudden, the idea of truly doing something quickly came about, and we were lucky enough to have been working with our friends and colleagues at Munich Re on actually, ironically, a program to deliver after-event support to municipalities and cities. And we've been working on that for 3 years. So all of a sudden, if I may say, the stars were aligning. And on Saturday morning, I was coming downstairs at 9:30 to leave to go to Heathrow to come to the Philippines. And my children were about to go to some Saturday morning thing they have. And they hadn't seen me for a while. And I sat them on my knee on the stairs. And I had to try and explain to them why I wasn't going to be there the weekend. And I said, do you remember that event in the Philippines? And of course they said yes. And I said, well, I'm going to see what I can do. And they said, they looked concerned, and they said, are you going to take them toys? And I suppose, well, I'm not bringing toys, but I hope with all of our support we can bring something that is going to underpin many toys and much resilience. So we are here on many levels, and we are not just anonymous businessmen. So with that, I cannot underline to you how much the world is mobilizing to support the Philippines. As I came here at Heathrow, there were posters, and we now have to use this, but the world needs you. Just as we are there to help, we need your leadership to make a bigger transformation we all know we need to confront in the future. So the future starts here, it starts today, and it starts together with all of us, even those behind me. Next slide, please, Richard. I just want to say one word about this amazing ultimate community product called insurance. It is the essence of a civilized society. It has allowed us to take control over our destiny. It allows us to absolutely understand risk because we apply science and reason to the future. And I'm so thrilled that members of the science community here in the Philippines are with us. It's all about policy, because actually insurance is about understanding behaviors and standards of resilience that we must all share to then share risk. And it's fundamental. Some of the most important acts of Parliament in my country have the word insurance in them, from health to pensions. And it is a remarkable thing. And ultimately, it's the means that we can all support each other at times of disasters, locally, but through the remarkable mechanism of insurance globally. My mother-in-law in northwest Spain, 10% of her premiums from MAP3 go into a global pot, just as mine do. And when there are challenges around the world, it's not about people's momentary humanitarian feelings. There is a contractual obligation of resilience between us. But you have to be included in that system to be resilient. You cannot be excluded, otherwise you do not benefit. That is what we are here today. So today we're actually going to reinvent that beautiful concept to cope with the scale and challenges that we face here in the Philippines, of course. And you are obviously at the very sharpest end of this, but actually we all face it. But with your help and leadership, I think we can confront it properly. So Next slide, please, Richard. Really what we're talking about here is something quite fundamental. For the sake of it, we've called it the Philippines Catastrophe Reinsurance Platform, or PREPIP. You can call it what you like, but ultimately it's a platform for the Philippines, and we hope a model for the world, because it employs what we call the primary colours. And with the primary colours, you can paint all sorts of pictures with all sorts of colours across a broad canvas. And it's about bringing together a community in an organised way, from science, whether it's Pagasa and Philvox or Amiato University here in Manila, to external audiences. We need the best of science, including engineering and economics and technology. It's about bringing together capital, from personal premiums of farmers in the south to global reinsurance markets and humanitarian aid, mutual, public, private, and ultimately, you know what it's about? It's about policy and regulation, ultimately underpinned by values. We have nothing if we don't have values, and here in the Philippines you have remarkable values. And then local and national and regional legislation to create solutions that we can optimize our future and frankly take care of each other and ourselves. And together we can apply this platform, this community, to a whole set of disaster challenges in the Philippines. And I know there are many. We could spend all morning talking about the different communities that we need to approach and how we can do that. And we will in the months and years ahead, because this is a journey, a long journey that begins today. But today we're going to focus on what we feel is a very important step, and one which we, together with all of us, could implement by June the 1st and deliver over $1 billion worth of protection ultimately to this country for the next typhoon season. It's a start, and it will triangulate a lot of things. Next slide, please, Richard. So we've called it PRISM, the Philippines Risk and Insurance Scheme for municipalities, and of course that would include our cities here in the Philippines, and I'm delighted the Mayor is with us today. Next slide, please. So essentially we want to apply the platform to this first specific community, which are those critical local agencies at the municipal level which are at the sharpest of sharp ends when disaster strikes or in the anticipation of disasters. And we could not believe the incredible serendipity of the fact that your progressive legislation at this level matched quite independently an approach we were taking in the capital markets to deal with help the Philippines. And we thought that the municipalities, for a set of insurance-related reasons, were the mechanism to go for. And these things have come together. And they're like this at the moment. In the next 3 months, we can make them like that. And that's what we are going to do together with you. Essentially, and it's specifically with municipalities, it's about their fiscal security in those critical months and years after an event, or multiple events in a year. And I suppose as I hand over to my colleague Ernst Rauch in a moment, the beauty of insurance is we can flex it to according to need. And we are concerned about the frequency of calamities in the Philippines and how municipalities may have to deal with those sometimes more than once a year, but certainly quite frequently potentially, but also the catastrophe-like events that we sadly witnessed a few months ago. And together we will work out what blend of that you would like. We've worked out a mechanism here for the more sort of calamitous 1 in 20-year event, but the beauty of reinsurance is that the more extreme events, because they're so extreme, with a relatively limited amount of premium, one gets an awful lot of potential capacity. So we will work out that equation with you. Next slide, please. I'm going to hand over to my colleague, Ernst Rauch, but before I do, I just want to say one word about him and about Munich Re. Willis is very lucky. We're a global broker. We deal with thousands of insurance companies around the world, hundreds of reinsurers, and we manage about $60 billion worth of premium every year around the market. And our estimate is that almost half of that is in one way or other about natural catastrophe. I would just say that of all of those companies, one could not have a better partner and leader in this program than Munich Re. There is no entity more respected scientifically and financially than the world's largest reinsurer, and it has been my pleasure and privilege to work with Ernst Rausch, who leads their climate activities with his colleagues here today for nearly 10 years. We'll have our 10-year anniversary next year. But Ernst, I'm so pleased that we are here together, and I hand over to you, and all the best.
Yeah, thank you very much, Rowan. Thanks many, and thanks to all of you for attending this technical meeting this morning. As Manny said in his introduction, and Rowan, this is a technical discussion which is of utmost importance when we try to find solutions which we are now going to suggest to you in very concrete manners and in detail. So over the next couple of minutes, myself and my colleague Thomas Mahl will show you the technical details of this risk transfer solution which we are going to present to you and suggest here to the Philippine government. As Rowan already said, we gave it a name, a title, and it's named PRISM. The concept, the generic concept of this risk transfer solution, of this insurance product, is a trigger-based insurance. Now, what does it actually mean? The payout is based on rainfall data and or wind speeds, and it could be extended to earthquakes as well. So it's entirely based on objective scientific figures, which are measured, reported by or through scientific organizations. So the payout happens whenever a certain wind speed or rainfall amount, which is predefined, is exceeded. So it's entirely objective. The beautiness of such a trigger concept is that the payout is very fast, because within days you exactly know whether the trigger has been met or exceeded, and whether a payout has been then triggered as well. This concept, this trigger concept, has been successfully implemented already in a number of countries, typically, but not necessarily limited, as a starting point for catastrophe insurance. What you see here in the headline is Mexico, for instance, with the Fonden concept. They started actually with a trigger product, and then it evolved into a hybrid scheme where they have both trigger and indemnity-based. Indemnity-based means if you have a certain loss amount or so, the compensation is according to the loss amount. However, there are certain preconditions to have this indemnity-based insurance scheme. Next slide, please. Yeah. With PRISM, again, the advantage of this concept is that it can start as a trigger-based insurance product and then can evolve or develop into an indemnity-based scheme. Next one, please. What you see on the bottom line is that if you have a starting point with a trigger-based concept, the implementation could be done already within some 6 months from now. So by mid of this year, by the beginning of the typhoon season, it could be fully in operation, and the cover would be ready to pay out as soon as these calamities happen. We also suggest that, and this is the broader picture over the next years, is that we do not stop. Can I go back? You do not stop, that's on the bottom on the right-hand side, with the trigger concept, but allow for a further development into indemnity-based schemes, very much like Fonden did in Mexico. Next one, please. So this is the Fonden scheme. To give you an idea where this has already been implemented, Fonden started in the late 1990s on the left-hand side with a trigger product, which is still in place for a fast payout, a payout within days or maybe 2 weeks after the event, so for immediate recovery money. And then on the right-hand side, what you see is the indemnity-based element of this cover. Here in Mexico, it's intended to cover infrastructure, public assets, hospitals, as you see, water infrastructure, and other, based on actual losses occurred. Next one, please. And you also see here that on the bottom line, it's again, we suggest that with PRISM it can be implemented very soon, and then long term and midterm is the indemnity based. Next one, please. Now, how would this technically work to get PRISM, this trigger concept, up and running within the next 6 months or so? This slide gives you an impression or so which are the parties involved. Just like with Fonden, you need someone to manage this product. That's here labeled with special purpose vehicle in the center of this slide. Now, what does it actually mean? You see here on the top of this special purpose vehicle a management board. So you can merge these two together, and organizations like the GSIS, which already function here very well in the Philippines, they could serve as this SPV, or an SPV could be an entirely independent organization as well, like with a management board of Philippine Re, PIRA, and others. So it's an open concept, but you need a management organization, no matter where the Philippine government would like to place it. Now, if you go to the bottom, who is actually paying the premium? The premium could either come from directly through the Philippine local and national government, the LGUs, or on a federal level, and or through external donors. So it really depends on how things evolve over the next couple of weeks or months with respect to donor funding available for this product. But even if there is limited or no donor money available, if Philippine government would like to start with this product, they could start with a smaller amount and getting it kicked off with premium coming directly from it. On the upper right-hand side, you see how it technically works. There is a technical organization, DHI, that's the Danish Hydrological Institute. With them, we together, also with Willis, we developed a monitoring concept and a trigger concept, which is already in place and tested. Tested also here for the Philippines. Now, how does it work? You have satellite data monitoring rainfall and wind speeds, for instance, here for the Philippines, and then they run a calculation when an event occurs, and my colleague Thomas Marl will give you a real-time example with the ongoing heavy rainfalls in the south of the Philippines, and then within a few days or so, it is clear whether the trigger, the payout, is met. On the left-hand side, you see the municipalities. That's the beneficiaries of this product, which we are suggesting. So they will have finally the insurance payout through this special purpose vehicle or whoever runs this product. And on the far right-hand side, you see the reinsurance capacity. This is where private sector insurance comes in, either local Philippine insurance capacity or international capacity. And Munich Re has offered a very, very strong commitment for this first phase and in the long term as well of such a product. So we are ready to provide the Philippine market with capacity. And with this setup, I would like to hand over to my colleague Thomas Marl, and he gives you even more technical details on the PRISM product we jointly suggest with Willis.
Thank you, Ernst, and I'm happy now to take over. First of all, I would like to thank you all. It's an honor for me to be present here. Personally, I'm quite emotionally involved because since 2007 I was active in Philippines in developing this product, which has been now not only multiplied in Philippines but also in other regions in the Caribbean, and it has proven that the concept we have designed was the right way to go to start with Philippines, because from the intensity of the events we had the biggest challenge to develop a product. And as already correctly said, we started to concentrate on satellite data, and I know exactly that few will have questions why we cannot utilize or benefit from the data on the ground, and this already shows you the challenge we had. There are data available, but we do need data at the time where we have the event, and some of the systems do not work during the time because you have electricity shut down and so on. So we had to find a solution where we can combine both data which are available on the ground, and to combine it with reliable data which we have every 3 hours available, and which were in this stage the satellite data. If you can pass on. Now 2007, and where we started, we had to elaborate, and this was the biggest challenge for us, what is happening actually in Philippines. And we have a good database from the history. And for us, at the beginning we said a typhoon is always a wind-driven element, which is not true in Philippines. Actually, you have typhoons, but you have also tropical depressions which can have heavy rain, as you experienced just as a moment. So for us it was quite clear that we said we want to develop a product which concentrates on extreme wind and extreme rainfall. And it's in contrary to other regions in the world like hurricanes. Here in Philippines we have the phenomenon that in cases where you have extreme wind, the rainfall is quite not as strong, and you have the opposite. You have heavy rainfall, but you have low wind. So there is almost no correlation. So this was the beauty, that we could design two different triggers by concentrating on wind on the one hand side and concentrating on rainfall on the other side. Now, the first task for us was how we can translate the intensity of a rainfall or wind into a language which is the insurance language, and we always talk about the reoccurrence period. In fact, what we do is we simply want to give you a feeling what is the perception of the people on the ground. So if you look at Luzon, highly exposed to typhoons, these people have the experience of strong winds. They know how to handle strong winds. Now, we know all Typhoon Wash in Mindanao. This was the first time where we had in the southern region a typhoon. These people were not exposed to wind, so the perception is totally different. And this was very important for us for the design of the trigger, to concentrate on the topographic relief of each and every local government unit, which was actually the resolution. Point is why we have taken local government units. Here I have to say thank you to all the government. We got the shape files from local government units, and so we can concentrate on that one, and we had the resolution on this basis. When we go to the next one. Now what we did is, on the example of Quetzana, which was actually a tropical depression, we concentrated on rainfall, and we transferred this with our monitoring tool into a categorization, which is the next one, if you can click. And you can see that how it looks. So we start to categorize by the intensities, by reoccurrence period. Here you see 10 years, 15 years, and 20 years. This is the moment where we at the moment operate. So triggers are quite low for a reinsurance, from a reinsurance perspective. But we also know that this is something which might be of interest, because we have the problem also of high frequency of events. For the design of the product, we concentrated on the local government units and average annual income based on the categorization you have, so from 1 to 6. Payout in this example is 5 to 20% based on the categorization. For a 10 years event, you get 5% of the average annual income of the municipalities. For a 15 years, you get 10%, and for a 20 years, you get 20% of the average annual income. So this was already designed 2007, and we developed it to 2009. So in fact, what we have already is a product in place, and we did the monitoring from 2007, and the IT system is already in place and operating. The next one, please. Here is an example how it will work. So here's what you see here now. You see an extract of one of the 1,634 municipalities. This is the average income based on the class. Maybe we have actual figures now. And what we can do is, on this portfolio, we can categorize to which intensity each and every municipality has been affected, and based on its intensity, we calculate the payout. This can be done within a few days. So, as Ernst correctly said, the purpose of this solution was to give money immediately, to have enough money for emergency relief and also for lifeline infrastructures. Next one. Here you see in our snapshot from 2013. As you can see, we had, from our perspective, we had more or less 6 intense events out of the 20 you had registered. Of course, the one outstanding one is Typhoon Haiyan, where we have 216 municipalities being affected due to heavy wind and, of course, a storm surge, which was a consequence out of it. But yes, there are other ones, and it's not even a typhoon. In August, we had a heavy rainfall due to tropical depression. Next one. Now, to be quite accurate, just as we speak, yesterday we had a trigger again in the region in Mindanao region due to heavy rainfall. And you see the affected municipalities. I think red, we have almost 50 municipalities highly flooded, and where we have extreme rainfall. On the left-hand side, you see the intensity, quite intense. And of course, you also see all the municipalities. Now, this monitoring tool is available. We can provide access. And what you can also do is you can also get the data and also the statistics behind. So that is quite transparent, and everyone can see how the region has been affected based in insurance terms on the by categorization of 20, 10, and 15 years event. We concentrated simply because of the frequency of the events and of the actuary of the event of Quetzana, first on this part on typhoons, but we also had in mind the earthquake part. Here what you can see is we said that we want to link the product with a state of calamity declaration of the local government units. And the qualifying event will be defined by the intensity of the earthquake, in this time measured in magnitude, and this more or less describes the radius around the epicentrum where all those municipalities will be benefit from the insurance declaring state of calamity. So what we want to do is we want to first give them a qualifying event, which is an earthquake based on its intensity, and the intensity more or less defines the radius around the epicentrum. And as a second trigger, you have the state of calamity declaration. So then to get a payout. Well, this is something we have designed in addition, and will be embedded in the system. Of course, we have only one example where we can illustrate it. This was the latest one in Luzon, which should be definitely, if we consider other schemes in place like Fondant, we have in mind to have a multiple scheme in place. Next one. Yes. Take a look.
Yeah, let's wrap this technical piece of our discussion up very briefly or so. From what Thomas and I just explained here is the essence is PRISM as the product which we are suggesting is it is tailored to provide catastrophe protection to the LGUs, the local municipalities. And it's based on a tax income as a definition or a proxy for some insured, and it also uses the declaration of a state of calamity as a secondary trigger in order to reduce what is natural with trigger concept, the so-called basis risk. Next one, please. What is really important, and Thomas mentioned this system is in place here for the Philippines for a number of years already. There is a micro-insurance product also named Climbs, which was based and initially used here also together with this methodology. So this is not new, it's proven, it's in place, and it's fully transparent, as each and everybody of you can look it up on the internet and follow the activities with wind and rain. Next one, please. It's a real-time monitoring system. And over time, if we discuss here a longer time period or so, from what is now managed through this DHI organization as an international organization, certainly local and experience and cooperations with Pagasa, for instance, can help increasing local experience as well. And maybe over a longer period of time, there can be joint activities together with Philippine research organizations. Next one, please. Yeah, and once again, if the Philippine government would like to go for it, technical details still need to be discussed, but as it is simple and straightforward, it is possible to really have it enforced by the beginning of the typhoon season. So, having said this, I would like to hand back to Rowan to wrap up the entire presentations here before we then, I think, enter into a discussion.
Ernst, thank you very much. And next slide, Richard. As Ernst said, this is actually our colleagues at Munich with Richard and others at Willis Re, we essentially with our partners executed over a long time the genius, I suppose, of simplicity. The key is to make this really simple. It is really simple. It works. There really is no technical risk. Capacity in terms of reinsurance and insurance capacity is there. Over the next few months, we just need to refine the final aspects of this facility with the partners here, and that really is all there needs to be done effectively. And then in the months and years beyond June, we can work with all the partners in this room to make it even better. I know, for example, our colleagues at the World Bank are supporting the development of more indemnity-based triggers with local agencies and AIR and others. There's some great work being done at the ADB on earthquake risk. This is a very open approach. We do not want to be limiting. We need to bring all our skills to bear. I would underline that there are true insurance benefits as well as humanitarian benefits in making this municipal scheme mandatory. On that note, I think between now and June, with your help, there may be significant opportunities for mobilizing international support to make that financing of that mandatory objective even more palatable here in the Philippines with international support. And I'll talk about that with the relevant authorities afterwards. Next slide, please. So, we are here with you all to do business. And this is what we think the critical path between now and June the 1st should be. We would like to think that by the end of this week, the authorities decide that in principle, we should launch a mandatory municipality and city-based nationwide disaster insurance solution by June the 1st. Period. And that during these next few days, and with your help in the next few minutes, we identify any key impediments or bottlenecks that may hinder the implementation of such a solution by June the 1st. And may I implore everyone to get whatever it is out on the table this morning. And based on that, and those issues, a PRISM core task force, including many of the key agencies here today, GSIS and perhaps the Climate Commission and others, is formed by the end of January to deliver PRISM by June. And by the end of February, in just 20 or 30 days' time, that core initial task force presents a plan of the key requirements and other requirements to the chair of the Climate Change Committee, Senator Lagarde, and the Finance Secretary, and they confirm with their appropriate recommendations a decision to go for launch on June the 1st. And they implement and they co-chair a task force of implementation. Within 2 months, by the 30th of April, the task force present a plan to those two co-chairs of what the facility will do and how it will work, and they confirm a decision to implement PRISM for June the 1st. That's just literally 1 month away. Within 2 weeks, any final approvals, authorizations, or other requirements to implement PRISM are obtained. Within 1 week of that final authorization, the PRISM program is underwritten by our friends at Munich Re. And that would be in place 1 week before June the 1st when it incepts. And from June the 1st, we would then work with everyone to develop further insurance and resilience mechanisms for 2015. Next slide, please. There is an international context to this, so I would imagine that it is important that we all show the local population here in the Philippines that we have delivered as businessmen, as politicians, and as authorities and scientists in early June. At the end of that month, the UN holds its regional consultation on the Hyogo framework. At the same time, there is the Global Financial and Private Sector Summit in London. We need to show the world that the Philippines is resilient and that we need to show it can attract international investment. We will provide a forum for the Philippines to do that in London. At the end of June, the World Bank hold their biannual Understanding Risk Conference also in London, and we would expect to showcase this groundbreaking facility to show like the Philippines, but also to provide a beacon of leadership for the world. In September, we of course have the APEC meeting here. I think it's in Bangkok, I'm not quite sure, of an APEC regional disaster program. I think this will be key there. The UN Climate Action Summit that Ban Ki-moon's holding on the 24th, and of course, ultimately, the Third World Disaster Conference in Sendai in March. There is an international context for this vehicle, and we intend to employ it to maximum effect. Ladies and gentlemen, Manny, Jerry, thank you very much for hosting us this morning, and now we look forward to, I hope, a very productive and effective Q&A session where we'll draw in our wider colleagues beyond Thomas, Ernst and myself, who will bring additional perspectives and answer questions. Mr. Chairman.
Thank you, Rowan. And we now open the floor for any questions or comments or clarifications on the presentations. As you ask your question, please introduce again yourself and the organization that you represent for the benefit of the note takers. Thank you. Yes, sir.
I'm Steve Andose. I'm with USAID. My question, if you don't mind, I have two questions specifically. The first is, how would you compare a program to facilities that have been offered by the World Bank, notably? A few years ago, the Philippine government was able to utilize a CAD DDO and was able to draw down fairly rapidly $500 million of credit provided by the World Bank. Since the World Bank is global and can pool risk globally, wouldn't that be a more cost-effective option for the Philippines? That's the first question. Second question would be, in looking at the model, I don't see where there is market discipline in terms of what role private investors can play in risk transfer or in risk pooling in this model. Funding for premiums will be coming largely from donors and the government, so there's really no market discipline there. Would that not lead to higher premium costs than a model that would involve private market players?
Thank you very much for those questions. I'll kick off, and David or my colleagues at Munich Re, if you want to come in, please raise your hands. I suppose the World Bank facility was at one level very successful to the Philippines. Indeed, $500 million was liberated very quickly. And we hope that such a facility, after that initial exhaustion, will be resuscitated. That hasn't happened yet, I don't think, and it may take some time for that to happen. And secondly, it remains slightly uncertain, as far as I can tell, exactly how much of that funding was actually delivered to disaster resilience actions. But nevertheless, it's a very important component, and we need to draw on that. Of course, the World Bank is global, as is Munich Re, as is the global reinsurance market, and I can absolutely say that the risk in the Philippines will be shared and distributed globally in a remarkable market. So that will be the same. In respect to, I think you were saying in terms of investors, we need to underwrite this quickly, and obviously it's going to be underwritten in this case largely or probably exclusively in phase one by Munich Re. Ultimately, as this program develops beyond 4 months, and do not underestimate the achievement it will be for all of us if we get this in place in 5 months. But going forward, we can create mechanisms which will liberate all sorts of capital from all sorts of places to use this instrument because it's the nature that it can be. And critically, and I think this is an important, this is the really big game changer, when a country, and I believe it should be the Philippines, encodes disaster risk within the financial system. So disaster risk becomes accounted for beyond insurance, and equally resilience is credited. And with that, the access to this amazing contingent capital facility becomes a driver for resilience, and actually access and prioritization for insurance, not humanitarian aid, I hasten to add, is driven by policyholders, whether they be municipalities or homeowners or factory owners, resilience actions. And certainly my views, both shared by the private sector insurance world as well as the international agency world, is that a long-term program in the Philippines should combine access to insurance-related capital to stimulate investment capital, but also should be tied to a progressive program of resilience at national as well as local scales. Over. David, would you like to add something, and we'll bring in our Munich colleagues?
Firstly, I can say the World Bank does recognise the role of insurance and reinsurance in risk financing. They have actively promoted schemes, most notably in the Caribbean, which has spawned similar schemes in Central America and the Pacific and Africa. So I think the World Bank does see that reinsurance does actually find a mechanism to provide quick, instant funding. The Caribbean scheme, for example, guarantees payment within 15 days. The event occurs, money arrives within 15 days. And that immediate funding is very, very valuable. I think in terms of your point about does this particular scheme encourage resilience or risk awareness, a parametric scheme by its nature, it triggers when an event occurs. You can put incentives in the premium, but you can actually incentivize people who actually have taken resilient steps, may have some degree of premium subsidy, that's possible, but probably it's when we move to the indemnity phase that the indemnity premiums can very actively reflect the resilience built within the system, so that if people have invested in making their buildings more resilient, the premiums will be lower. So I think that this actually encourages kind of a positive feedback mechanism. People actually are encouraged by premium to actually invest, get a lower premium, and actually then once claims are made, building codes can be enforced to make sure buildings are rebuilt to a higher standard, again, with lower premiums. So I think this is a positive feedback loop. I'm not sure.
I just want to add something regarding private investment. As you have seen in the page, we have considered a special purpose vehicle, and the solution is, of course, a long-term perspective to have a sustainable solution, insurance solution, where over the years the SPV can build up its own retention. So this is now a starting point, as I said to you. We have reoccurrence periods which are extremely low. Now, looking at Fontaine's history, the reoccurrence periods were even in the same level. But now we are talking about a 50 or 100 years reoccurrence period, because the SPV has built up such a fund where they can retain a lot of the risks. And this is actually what we would like to develop mutually with you, with the SPV, to build over the years, to build up the retention, that a lot of the risk can be retained, and of course the bigger ones can then be passed on to the reinsurance or insurance market.
Thank you very much. Yes. Good morning. Well, I'm from the Department of Budget and Management, Director Amy Delantar. Sirs and ma'ams, well, this is just one of the input that we'd like, and I thank Thomas for mentioning about the sustainability. Now, in the Philippines, we have 1,497 municipalities and a total of 43,592 local government units. We're top-heavy at the base, with 42,000, the basic unit called barangays. Okay, now what has happened is that developments as far as calamity fund is concerned for the local governments, at first we had a 5%. The law provided a 5% out of total local resources, regular sources. But then in May of 2010, Republic Act 10121 was passed, strengthening what we call now the disaster risk reduction management system in the Philippines, where the 5% now became the floor. So giving now flexibility to the LGUs to go higher and provide a bigger amount for calamity. But then again, yes, Rowan has mentioned it, it really depends also on the local capacity, the financial capacity, because there are mandatory items like personal services for the payment of salaries. There's a cap for development projects, for debt, the incurrence of debt by local governments, which is 20%. Now, so what normally happened, even with the 10-121, one item that was mentioned here in 10-121, the RA, Section 21 mentions already that the local calamity fund of the LGUs, other than it can be used for the purchase of disaster equipment, rescue equipment, it also mentioned, the last item there is the payment of premium for calamity insurance. Because earlier, of course, it was also mentioned here about the existing GSIS procedures. Well, the local governments, upon action of the legislative body, we call it the Sanggunian, they can set aside and appropriate an amount for insurance. But then we leave it, because they have the local autonomy, to their wisdom and judgment on how much and how well to incur this and manage the insurance. So from our point of view, through the years, this is indeed with the climate change resiliency program, we see the need for also strengthening risk reduction activities. All that maybe we want to suggest is, considering that we have a network of local governments unit, is the need for coordination and management of the risk reduction activities. Now, just to take for one, when disasters occur, well, there can either be, as was mentioned here, a nationwide state of calamity declaration by the president. So when that happens, the local governments need not come up with their own declaration. It covers all. But when the disaster or calamity happens sectionally, just a sector, then it is up to the local government units affected to come up with a resolution declaring the state of calamity that they are experiencing. So what we would want maybe to suggest is that this be undertaken in a manner wherein we would really try to maybe seek further improvement on the management of that particular expenditure. Because before, a long time ago, we had even for the, thank you also Thomas for mentioning the SPV. Because before, that was many years ago, we had the property replacement fund for the national government. But that was short-lived, 2 to 3 years only. Because we saw also the need, because in the budgets of the national government, especially now, we have the rehabilitation and reconstruction fund. We integrate it in the budgets of the agencies. However, on the part of the local governments, it really is dependent on the local initiative, the Sanggunian action. But with the vehicle provided here in this particular aspect, then we also see the support given to our local governments. So all that we ask is maybe we also have to prepare them well. Like when Yolanda happened, I think one of the things that we acknowledge that we have hazard maps by our Department of DNR, Environment, and the DOST, Department of Science and Technology, coming up with hazard maps. But I think one thing that we have to do is, since we are composed of several islands, is the accessibility and the interpretation into the vernaculars. Because when Yolanda happened and people keep on saying storm surge, our local residents, even we ourselves, what's a storm surge? But maybe if it was translated into a vernacular and they would understand it clearly, then people would double be alert of the things to happen. So maybe it's the groundwork setting, preparing our local governments, because we're made of 7,000 islands. So when this happens, so sir, we just wanted to give some inputs. That while we have this, we have really to make sure that at the ground, they are also ready. And this is maybe part of the resiliency program that has to be further improved and strengthened. I see you, Paul of DOF. Yes, sir. We acknowledge the resiliency program that DOF also has been initiating. And so, on our part, these are just some of the inputs we wanted to mention. Thank you very much. Thank you.
I just want to add something. I have two comments, and maybe you can already answer the question. We had seen a big challenge here in Philippines, because if you look at the local government unit's income and the existing calamity fund, you have a quite heterogeneous structure. You have a few local government units quite rich, to be honest, and then in the next neighborhood you have a local government unit almost there's nothing in place. So the point is, how do you think on the nation level, how you can homogenize this heterogeneous structure we have on the exposure side, that we at the end we can only reflect what we can get on figures from the local government units annual income. That is our exposure we have, but we have the strong feeling also to avoid this kind of mismatch of income, where and how the government can support either on the premium side as well as on the payout side, because if you insure less or almost nothing, then you will get nothing. So that's one point I have. The next point is, and this is, I like the DOSC. This is something what we have also seen in Mexico, and the World Bank colleagues can support us in this respect as well. This fondant scheme and in the Caribbean was as well, it was not only an insurance scheme, it was also a scheme to build up internal capacity, modeling capacity once it comes to storm surge, once it comes, for example, tsunami is still unknown risk, so for everyone, and this needs to develop as well once it comes to flood, once it comes to landslides, to build up the modeling capacity where you can also have an estimate immediately what might be the potential loss, and also which with the intensity what might be the probability by considering all the factors and the changing risk factors. So this is something which is coming, a lot of the models come definitely from the insurance industry, but where we could have synergy effects on both sides to work together.
We'll just be brief on this. Okay. On the first, thank you, Thomas, again. On the first, how to homogenize, considering that we have 6 income classes, and majority of the 43,592 local government units belong to the 4th to the 6th. So that is where, again, we would like to also mention and acknowledge that the Bureau of Local Government Financing of the Department of Finance have or maintains the database on the income of the local government units. And this is, I think, one matrix and one study that has to be duly considered. Yes. So that immediately you can see the high end and the low end of the local governments. Now, we do also acknowledge that the World Bank and the other international communities have also assisted the National Disaster Council as far as databasing is concerned. And I think that is one among the first thing that has to be looked into, so that you can come up now with the models. Second, on the capacity, thank you very much, because that's where, while the prisms and types of insurance would really be something that could be presented to them, the capacity of the local governments really to effectively and efficiently undertake this has to be something that has to, it is a, we acknowledge also the ILG, the Department of Interior and Local Governments, who has been continuously undertaking capacity building activities with the local governments. But I think on the insurance side, we should, I think, ask our local government academy, which handles the training programs, to inject this include it in their curriculum.
Thank you.
So that people would
Thank you, Director.
Thank you very much.
Thank you for those valuable inputs. May we now hear from our Climate Change Commissioner, Yev Sanyo. We saw you raising your hand earlier.
Thank you, Manny, and good morning to everyone. I'd like to thank you for giving us the opportunity to engage in this very important conversation. I have a couple of comments and a couple of questions. Well, my first comment would be, I think many people take for granted why the government service insurance system and the social security system are both members of the National DRRM Council. There's a reason for that, because risk transfer is a very important component of addressing risk. And so we cannot overemphasize the importance of this discussion, as well as the importance of developing innovative insurance products. Even the Climate Change Convention has, through its series of decisions in the past years, has identified risk transfer as part of enhancing long-term adaptation actions. And in that context as well, the Hyogo Framework for Action has identified risk transfer mechanisms as an important part of addressing risk. In the Philippines, both the Climate Change Act and the National DRRM Act both call for the formulation and development of risk transfer mechanisms. So we have two international frameworks that lay down this important principle, and we have two important national laws that also indicate that climate change and disaster risk reduction must go together. I think we have a lot of work to do in order to integrate this. In many cases, we still have the silo mentality where disaster risk is addressed separate from climate change adaptation. Now, my question would be, well, first, I'd like to express my pleasure seeing the global insurance industry being very keen on serving this market. And I think the reason is very obvious. But we do need, of course, enabling policies and a robust enabling environment to ensure that the market becomes robust, that access to such insurance mechanisms, especially for the poorest of the poor, is ensured. So how do we ensure that such products are in fact accessible and targets the poor? My other question, which is a little bit on a different note, is how do you see the global insurance industry in the context of reducing risk play a role in the overall conversation on the loss and damage mechanism, which was established in Warsaw just very recently? Thank you.
Rowan?
Thank you very much indeed, Deputy Minister, for those interventions. There's, I think, in terms of the legislative or sort of the implementation challenges that you've identified, in terms of also delivering at a very local level, we do need, if you like, a mobilizing and specific objective. And I think, frankly, this opportunity to really mobilize everyone by June in the wake of last autumn is perhaps the greatest opportunity we will have, and there is tremendous international support to make this happen. So I have to say there is no time like the present, and it begins a journey where we will employ in due course smartphones to deliver facilities, I'm sure, to the most remote regions of the country, whether it's in agricultural insurance or whatever. We can make this remarkable and beautiful archipelago a laboratory for the world. So that's the first thing I'd like to say. I suppose the second thing, in the context of Hyogo and loss and damage at the UNFCCC, which will come through in Paris in December, the ironic thing is actually that insurance is rediscovering itself. We have had, frankly, a mental health problem. We've lacked a certain sense of self-confidence about our role. I have two passions for the second half of my career. I've just clocked 45, so I'm kind of almost over halfway. The first is to make insurance the most desirable and fashionable industry for young people to go into in this country and beyond, and also with forgiving any economists in the audience, but to make geography as, if not more influential than economics within 10 years. So, but we absolutely have to understand how, by encoding the environment into finance, everything changes. I'll finish with one final analogy. I was lucky enough to study English literature before I went to university, and I studied a period of literature in England called the Romantic period. That's with a capital R. And it was as Britain was industrializing and we were moving to the cities, there was a concern amongst many that we were losing contact with nature. And man would be reconnected to nature through poetry, through art, and through literature. And that's how we did it. We created this emotional reconnection. And if you read Wordsworth, you will know what I mean. We are entering, and this country is at the seat of what I call the new Romantic period, where we will be reconnected to nature, not just through poetry and art, though I'm sure that will come, but through the modelled world and capital. And it's that which will reconnect us and resensitize our relationship with nature. And we need to do that quickly. And with your help, Minister, I think we can. And I suppose the final question is, does anyone see any key impediments which we should note? And in principle, do we want to move forward and see if we can put this in place by June?
Thank you very much. I think it was a very insightful presentation. But since you've mentioned possible impediments, perhaps I can flag them already. One, on the principles, on the framework, I think that presented by the UNISDR, by Jerry, that's, I think in terms of principle, that's well taken. In fact, my boss, Secretary Purisima, is really pushing for paradigm shift from post-disaster financing to ex-ante financing, and wherein risk transfer is really part of that broad framework. The second point that I want to stress is that you have this general framework, but you also have a specific framework that which you call the PRISM. One may perceive it as a particular insurance product, and under our laws, you would require some sort of competition. Even the GSIS, when they do a reinsurance of their interest, they have to do a public competitive or some sort of competition among. So if this is proposed by Willis and Munich, then I'm not sure whether that can be a basis for some sort of competition, because it may be raised that it's that should be subject to some sort of other people from the reinsurance industry providing also their inputs, and also from the private sector and all that stuff. But clearly it's something that should be worth pursuing. The other issue, apart from the requirements of the Procurement Act, whether this would be considered procurement, or is the other issue of, for example, GSIS has a mandate for ensuring government interest, although a lot of people have been saying, why limit it to GSIS, and that's a different story. The other thing is on the LGUs. We are pushing for mandatory pooling of LGU insurance, but that would require legislation again. And the other thing is we have to also, the third, I think, important consideration is what would be the position of the Commission on Audit. Because we've been trying to push for some things, market structures, for example, in the case of in the energy corporation, they were toying around with derivatives. In the case of the health sector, for example, there was a case of trying to protect against a particular epidemic, like if an epidemic happens, then you would have this particular vaccine. But however, if that vaccine is not used, then the COA would make an observation that that's a waste of money. Why did you not use it? But this precisely is meant as an ex-ante financing. But if COA has the view that this is a waste of money spent, then implementation-wise, those who would want to implement this would think twice. I'd rather not use it, otherwise it may be questioned by COA unless there's. These are the little things that you have to. For example, the LGUs. That was mentioned by DBM that it requires local sanggunian. Although there's already, it allows them to pay for insurance premium. You have to go through each and every. So these are the types of things that you need to address, because there's so many regulations in government that somehow impinges on your proposal. You really need a global legislation to fast track all of this, and we need to do consultations with all stakeholders concerned. That is required even in the way we do things. So I'm not sure if there's really a unified effort to do everything by June. That's a good target, but given that this may require legislation and other aspects, it's really a tall order. Yes. Yes. Yeah, but I agree with you that there's an urgency, because the Yolanda type events is the new normal, and we really have to prepare for it. That's why we're really pushing. In fact, maybe in the high level forum later, I'll give you the thoughts of my principal on this.
I'd like to make a comment from the private insurance industry. And, just to share with you, in our conventions, conferences that we've had, for example, last time in Vietnam, where the ASEAN Insurance Council meeting, in fact, they waived the reporting of each country, and instead they focus the portion to make the people aware, and the council itself pushed, for everybody to have the Philippines because of what happened in Yolanda. Now, this is another example of a venue where we have friends from all over the world coming over, sharing their expertise with us, and truly coming from a government official. You yourself actually are pinpointing the barriers. I guess everybody, as a Filipino, we are all here. I guess what I'm asking now is that we have friends coming over, no, and trying to give us, sharing this expertise. We in the insurance industry welcome that. But precisely, our government agencies, no, must not wait, no, for the time to happen and then, we know already the barriers. You have COA, you have all the others, DBM, the local government units. I guess we need to work together. That's why everybody's been invited to be here. And I guess, Secretary, you mentioned really what's happening to our country, to our government. No? There are very good ideas being proposed, and later on it's killed. Why? Government bureaucracy. So our point here is, I guess this is where the Senate can come in, our Senator Ligarda. Precisely, this is the venue to create the law, no, that will exempt all of those, to take out all of those bureaucratic requirements, di ba? Kasi, you know, we cannot wait for another Yolanda to happen. In fact, if you are aware of the study of Dr. Solidum, if a 7 magnitude 7 earthquake happens in the West Valley Fault, this could result to about 40, that's the prediction, simulation, but 42,000 deaths and trillions of losses. You can just imagine if that happens in Metro Manila. So I think there's a certain urgency, and we thank our friends, no, for pushing us to do this. But there's a lot of goodwill from all over the Philippines. Ang sa akin naman, as a government official, Mr. Secretary, I guess siguro from the government side, let's work together to make this happen. Yeah? Yes.
I'm not saying that we're not going to do it, no. In fact, that's what my principal is pushing for. I'm just flagging to you the issues. And I think to fast track this, you really need legislation. You may need to amend the NDRMC law.
I think the points raised by Undersecretary Paul are well taken, and I think the Secretary also has noted them. Now, it's just the high-level session to which you are all also invited to participate will be commencing starting soon. Now, we are going to wrap up now, but we would like to quickly hear from COA. Is the COA here? A commission audit. Briefly, if you can address some of the points raised by the Department of Finance.
Yes, good morning, and thank you for this opportunity. We as auditors, the main function, you should remember that we are in post-audit. But when we do the post-audit, we look into the what they call the mandate of an agency or whatever legislations are issued. Now, when we speak of legislations, when the DBM director here speak, she told us that there are some issuances already in place. So what we can do now to fast track the implementation of this program is to review all the existing rules and regulations pertaining to insurance and disaster management. Because I think we have already enough issuances, or maybe if these are existing, this must be reviewed, revised, or amended. This will fast track the implementation of this. It's not a matter of pointing out who's in fault, like the COA hindering all of this. No, it's not. We're just trying to see to it that whatever is in the law, it is implemented properly. So there are problems when these issuances are not followed, because this is also our duty to see to it that all of these are in place. So what we can do now is to review even the GSIS law creating the what we call the RA 656, the insurance of the Philippines. I have just talked with the the GSIS representative here. There are already insurance for calamities. So we really have to review that RA 656. We could update it or amend it or revise accordingly to have this in place. Actually, there's no really problem about this because there are already in the RA issued also for the local government. They are allowed to insure, except that most of the insurance here is that it's on the properties, not like this is a different one because the basis for the premiums, I think, if I understand it right, it is based on the income of the local government units. So I was thinking, as the DBM secretary said, director said, there are 6 categories of local government units. Maybe to implement this, it is good for us to have a socialized, the richer LGUs should also help the poorer LGUs. We should not do this on a category level, but on a national level. Because it will not be right if we go on a per category level. What we need really is if there are, what I am also asking is if there are donors or international agencies like the UN or the World Bank. I was also an auditor of the Department of Finance, but most of these aids becomes loans to the government. So those are things that we have to look into to properly implement this. It must be on a national level and review all the issuances to make up to a one issuance that will really implement and make it really effective.
Thank you. I think we are in that process of reviewing the legal basis for this. And you mentioned about GSIS. I think we have only 1 minute to hear something from GSIS in that regard, please.
So, Mr. Castro from GSIS, I have quite a number of queries. Maybe I will raise them later. One thing is that we have to identify the SPV. That is very critical, and the source of premium. The DBM mentioned earlier that premium is very important. In insurance, premium is very important. No premium, no coverage. So I guess that's one. And then the sum insured, I have a question on the sum insured. What is the indemnity in case of a loss? Is it the actual loss or based on the proportionate annual income for the last 3 years? And how about the application of the deductible? What is the participation of the local government in case of a catastrophic loss, with the declaration of the government that the LGU is under the state of calamity? And in the defendant case, how do you proceed with the issuance? Is it an annual policy issued per LGU for each local government, or one single policy for? Those are some of the questions, Mr. Thomas. Probably.
Thank you. First of all, thanks a lot for your suggestions. You have immediately got it up with the exposure problem. The solution, I very much liked what I had heard earlier from the Secretary with the pool on the national level to find a way how to distribute the money to those where actually the money is needed. Now, your question. The product is an index product. The focus on the product was to have immediate cash flow, liquidity available in the aftermath of event. The point is, the importance is immediately. So to avoid what we in the insurance industry have, after you have a big event, you need 1 year almost to do the claims assessment and for the payment. But we have identified, particularly for the people on the ground, they need money immediately to just at least to have, we say the golden hour of relief. So this was the objective. And as underlying, this was for us, we need a reference. So we said, okay, we know the local calamity fund, we know it's made reference to the average annual income of the local government unit. So what we did from our studies, we took the average annual income based on the category classes of 1 to 6. So this was the assumption, and then we added it up. And based on the intensity event, we calculate the percentage out of this income, and this will be paid out. There will be no deductible. So that's the point. Coming now to the premium source. This is a very important one. I know that some of them, they have even extended the local calamity fund on the local government units. Some of them most affected also due to typhoons or whatever, they are not even to build up their local calamity funds because of the frequency of the events. So the question is now how you want to tackle this issue, where is premium available and how you want to do this. I think, and I go again to the pool solution, to work together with local government and also to have a kind of subsidy coming from the national level to promote the insurance as well could be the solution also for the national scheme. Because at the end, it might be also that you might have a local government unit highly affected where you have to contribute more, simply because they need more money to survive and to keep the infrastructure alive. So that's something where we also need a mechanism on the national level to allocate the money, the flow of the money to those which are actually in need. And I very much like the one on the national scale. That's exactly why we have also the resolution on that one. I hope I got all the points.
Okay, thank you very much. I believe we don't have much time to spare since we will be proceeding to the high-level forum. But as we end this technical discussion, we would like to thank our subject matter experts who have joined us, Rowan Douglas, Jerry Velasquez of United Star, and the rest of the team from Willis Re and Munich Re, and also the representatives of various national government agencies who have joined this very important meeting. We have discussed much, but there much still remains to be clarified and answered, but nonetheless, rest assured that the Senate Committee on Climate Change will be in touch with you and will provide you the proceedings of this meeting. And we will continue the process of dialogue and consultation in search of answers and more sustainable solutions. And just to wrap up or provide a summary of what had transpired, I guess this forum has become very, well, aside from being very inspiring, from the personal sharing of Rowan, and also very intellectually stimulating. But clearly we stand before an immense challenge now, the challenge to reduce the prevalence of disaster risk in the country, and the challenge to seize the opportunity to make a difference in policy and action by all stakeholders. We are also challenged to harness our national and local capacities to embark on sustainable interventions and to deliver the benefits to the Filipino people, especially the most vulnerable and the poorest of the poor, as cited by Climate Change Commissioner Sanyo. The benefits that they long deserve, a safe and resilient Filipino society. This forum also conveyed that the Philippines can become a game changer, one that can model the way for the region as well as the world in effective disaster risk reduction for a more resilient world and a more resilient future. So thank you very much. We end this technical discussion. Perhaps I think if we have some time for snacks, I think there's snacks outside. But we invite you all to the next forum, which is the high-level forum on disaster risk insurance. Thank you.